And welcome to the VSA Capital Tech and Transitional Energy podcast. It's 30th September, Thursday. It's the end of the third quarter, so there's lots of results and things coming out today. And actually, everybody's very, very busy running around the city trying to get deals done. I'm told there's about 50 deals going on at the moment, and actually, we're rather busy. We've got a lot of deals as well. So this may be a quick one, Phil, but knowing us, we also end up nattering on about things. So who knows?
We will indeed, Andrew, and yes, it's a busy time for all.
Okay, look, I'll tell you what, I'm going to hit the nail on the head to start with. I know, obviously, my phone has been ringing like mad. Invinity Energy Systems is one that we talk about in every podcast. The stock price is having a very horrendous time. It had interims this week, and people seem to have, to a certain extent, got their knickers in a twist, which is rather disappointing. Clearly, there's a limit to what we can say. We can only talk about what's in the public domain. But I mean, the interims, yeah, okay, there's some delays going on, but I think the whole world knows that there is a supply chain issue and that there are lockdowns in places like Australia that are slowing things down. Everybody knows that there is inflation that's causing costs to increase. What's your take on this, Phil?
Well, Invinity Energy Systems, the ticker is IES, and they're a corporate client of ours. I think that the first thing is that they are actually, they're manufacturing, they developed and manufacturing advanced battery technology, and because the product is manufactured and have not, just developed SaaS software that you can download, then obviously they require components. It requires manufacturing resource, boots on the ground. Things need to be shipped around the world, and wherever you look, costs for semiconductors and the availability of semiconductors has been, the costs have gone up, the lead times have gone out on semiconductors, container shipping prices have gone up. I mean, all of this, the whole global supply chain is in turmoil at the moment, and that's as we come out of, the world being shut down. And everywhere you look, everyone's trying to get a hold of resource. Mm-hmm. So will that situation, last longer term? Unlikely, because these things have a way and a habit of turning around. But near term, what they've done is, it is amazing, really. I mean, they've come out of a development phase with advanced tech, and they've been commercializing it and trying to ramp manufacture. And unfortunately, it's just in the worst time possible. But
look, also, I mean, they need to put some news out, don't they? Let's be honest. They haven't had any news of things, and we think the Energy Super Hub actually has already started on the first cluster, so we could expect news on that literally any day. From what I hear, that basically it is already being run not by Invinity engineers, but by engineers from the project itself. Just announcing that clearly would have a very positive impact, or should do anyway. Yeah. They're quite strict about what they want to say in terms of orders, but maybe now is the time where they give us a little bit more colour on what orders are about to come up, because we do believe there's a lot of orders to come in the next few months. Anyway, we're not hiding behind a bush trying to pretend it's not happening. We are recognising the fact that this isn't very comfortable for shareholders. Yeah. But whilst I'm on that, today we've seen the UK government talking about possibly taxing gas, get it right. People switching their homes to electricity to help, the whole renewable energy situation and transitional energy. I mean, it's easier said than done. I don't know about you, but I've got a bloody great boiler in my house and I can't just turn it over to electricity, but there you go. But, it is more demonstration of the whole government and the world trying to go down this renewable energy route. But at the same time, of course, we had announced results or an announcement from SSE this week, where they said that, wind was a third below what they had expected. That's why you need energy storage, because when you store the energy when the wind's blowing, and then you can use it when the wind's not blowing. There are so many big macro factors pointing towards energy storage. I don't know. Maybe I'm missing something, Phil. I could get quite wound up on this.
No, look, I understand your point. I mean, if you look to the States, and they tend to be a global leader in technology, and I was looking, they was it ESS, flow battery storage, raised $200 million at nearly $1 billion valuation, and it's just that valuation of core bits of kit in the transition. And batteries are core bits of kit, and right now there's one main tech solution, it's lithium ion, but there are clearly alternative solutions out there that perform better, more reliable, and lower fire risk. Anyway, there we go.
Yeah, and look, you know what? I don't know if you saw in the last Sunday's newspapers, we had this project right on the front page of the business section suggesting that the way to solve our energy crisis was to run a cable all the way from Morocco, because they had plenty of wind and sun. I mean, surely, guys, we can do better than laying a cable all the way from Morocco. Just put some good Infinity batteries storage in place. A lot easier. Well, I admit that Morocco is a very nice place to go and start the cable, but you don't really need to lay it all up the coast of Portugal, across the Bay of Biscay, over the Isle of Wight. It's just madness.
We live in a world of great change, and lots of technologies being, the technologies being developed, but such an active sector.
Well, it's going to get more active during October because, of course, we've got COP26 coming up, and everybody's going to be sort of, talking about what they're doing for COP26. It's going to become big news. I'll tell you what, I mean, not that I'm trying to go through the results section particularly, but whilst we're on this whole thing, I don't know if you saw Fulcrum had an announcement also. I think it was yesterday. I forget the day, so damn busy. But they were actually pretty good, although they were particularly bullish about, again, sort of high voltage transmission for the transitional energy and EV charging.
Yes, yeah.
Did you spot that one? I'm sure you did. You spot everything, Phil.
Thank you very much, Andrew. Yes, we try to observe them.
But again, that's. I mean, Fulcrum was, if you remember, when we were talking about 6 months ago, sort of picks and shovels stocks. Fulcrum was one of the ones that we said fitted into that category, but actually we preferred, in general, Nexus as a sort of similar type company. We thought it was in a stronger position, but it's all part of that picks and shovels concept, isn't it?
Yes, it is, and about the change in the infrastructure that's going to be required for a big transition, particularly in the transport area, and for automotive charging. And very interesting to see news this week because of the petrol shortages on tanker deliveries. Lots of inquiries on electric vehicles now. Oh my word!
Well, petrol drivers have got range anxiety now, haven't they? It is ludicrous. My wife was going to go to Cornwall today, and she said, "I'm not going to Cornwall today," even though I had got her a full tank of petrol. By the way, I went and got her a full tank of petrol because I actually drove to Heston service stations on the M4, and it was quite easy to get petrol at the weekend. Anyway, there you go. But she's not going to Cornwall because she's worried she might not get back.
Oh dear, might not be good. Right.
Anyway, this isn't about petrol. This is about tech and trans. Actually, Ceres had some numbers today, which I thought looked pretty good, actually. I mean, the market has marked them down slightly. I don't quite understand that, but I don't always understand everything the market does. But to me, look, obviously it's a fairly highly rated stock anyway, and it's been a good performer. But actually, those interims to me look pretty good, and they're doing everything they said they'd do on the tin, so to speak. And it's well capitalized, great shareholder base. I don't know. Did you have any thoughts on that one, Phil?
They're doing well. Ceres Power's obviously fuel cell technology, and targeting transport sector is one of their main areas they're targeting, but also heating systems. You're right. Look, they are delivering. They're doing what they said they would do. It's been a long time coming. Fuel cell development, years and years, but it now is coming to the fore as a key transitional energy technology, and they're getting the valuation recognition for it.
They are, as I say, the market was marked down a little bit today. Slightly surprising. There you go. C'est la vie.
Yep.
Fuel cells is. We had a company in this morning, didn't we? A private company looking at fuel cells and this sort of thing. I mean, there's a lot of technology out there around the world. This is not a new technology, but I have to say, Ceres, I think, have got it right. Anyway. I'll tell you what. Actually, let's move on a little bit because, and again, we need to rattle through a little bit. I'll tell you what was very interesting yesterday was with a fairly recent IPO, Alpha Wave, because slightly confusing. Alphaville, which is a sort of chat room of the FT, pretty smart cookies, came out and basically did a complete hatchet job on them, and the stock price sort of fell 50% in a day. Fairly unusual for the FT to do things like that, but it was also it was a highly critical piece, and I mean clearly a major move in the market. I mean, basically they said, look, Alphaville, well, they came out with all sorts of accusations, actually, didn't they, Phil?
Yes, they did indeed. They'd undertaken quite a thorough analysis, and as you say, it's unusual to see the FT do that. But all analysis is well, it keeps investors informed. In a different way, and it makes a market.
I mean, it makes you just worry a little bit about, we're seeing a lot of these tech companies now come to the London market. Hopefully I'm all in favour, and hopefully we get them right. But there have been quite a lot of questions, haven't there, at IPO times, and we've debated it ourselves and what the right valuations are for some of these companies. And they're quite difficult to value, and when you make a single stock investment, you do run those sort of risks, don't you?
You do very much so, and especially if you're trying to value things sometimes on fundamentals as well, and it's appreciating who else there might be value to. I mean, you've seen this week that Blue Prism has been sold to Vista Equity Partners for 1.1 billion. Blue Prism, I'm just trying from memory, on its last results was turnover of something like 150 million, but loss making, and it been investing a lot in its sales. But the value clearly for Blue Prism is being seen in its robotic process automation software and the future market potential. But there's a definite challenge in valuing these things. But just on IPOs, Blue Prism IPO'd in March 2016, raised £20 million at a valuation of 48.5 million.
Well, yeah. There's always been quite a lot of discussion on Blue Prism, hasn't there? It's just exactly what it should be valued at. But as you say, now the private equities come in, we know that the answer. It was quite a volatile stock, wasn't it? I mean, it went shooting up.
Yeah, it was.
And then came shooting back down again, and then went shooting up, and but yeah, that's definitely good for the sector.
Yeah, it does. It shows what can be done in terms of using the equity markets. I also saw. Do you see the IPO IP Group announcement and we've discussed this one before? The Oxford Nanopore IP was priced. The IPO was priced at 3.4 billion.
That's after the IPO, so they're raising about 350. So actually, it's priced at about 3 billion.
Yeah.
But look, I think it's still pretty good, and I actually think Oxford Nanopore is a pretty good situation because it's so unique. I think the Americans will love it. Look, the markets like the announcement of the price. It's up 5% today, up 6p, 142p. As you know, we're a great fan here of these sort of collectives, be it IP Group, Draper Esprit, Frontier IP, which is one of our corporates, and we've sort of briefly mentioned that we're trying to look at another one for very early stage tech, using the British Business Bank as a partner as well, because that gives you extra leverage, and we're looking at a vehicle in that. Because I think, again, with technology, it's unless you're really, really switched on, a collective is not a bad way of investing, to be honest, for most investors.
Yeah, that's absolutely right. It's all about spreading risk, and earlier stage technology ventures can be, very, very risky. But my word, what can be done from early beginnings? I only saw Frontier IP Group, they're an IP commercialization company. They undertake commercialization work for university spin-outs, early stage tech companies, and for that they get an equity stake. Ticker is FIPP. It's client of ours, 60 million market cap. But they announced, Exscientia, which is one of the company in their portfolio. They've got a 2% stake in Exscientia, but Exscientia spin up from Dundee University, and this is AI for drug discovery. We've discussed this one before. Really exciting business, backed by major farmers. SoftBank, BlackRock are investors in Exscientia, but it's filed for IPO to raise $275 million. But looking at the price of the IPO issue, would, I think, calculated, would value my Frontier IP's stake at 23 million to 25 million pounds. And this is a 60 million pound market cap company. So it shows that the Frontier IP group model, well, the IPO has not happened yet, but potentially can be quite powerful.
Yeah, and look, the stock's been performing beautifully, hasn't it? And we've been pushing it all year, should we say? But as I say, we do act for them, so one should always be aware of that. Actually, one that we used to act for, but we have moved on, should we say? But we always thought they had really interesting technology. We just struggled slightly with the funding. But Eternity Networks this week came out with a fundraising and actually have raised about £5 million. So, I mean, well done to them, actually, because that hopefully will give them the runway, because they actually did have a good product, didn't they? I mean, do you want to just remind us, Phil, of what they did? Because it was all to do with network cards and things and 5G.
Yeah, it's called SmartNIC technology. So this is they have software that's used in data centers, in particular, and within the 5G networks, to manage the traffic flows across the networks and to manage them highly efficiently. And the data traffic going through data centers, all those videos that you're processing on your smartphones and you're looking up whatever, but all that's flowing through data centers now as the network tech. It used to be part of the networks, is now in data centers, and their technology, which sits on semiconductors, controls that, manages it. So yeah, it's a real interesting one.
Yeah, no, look, I mean, well done them getting the money. So, I mean, one of the things about this, the stock, I think it was floated at about 160p, shot up to 200p, came down to about 10p, and has got up back to 50. It's now done this deal at 35p, so it's a fairly volatile stock. Not been the easiest, but this could be their turning point. Who knows? I'll tell you, actually, this is more of an anecdotal evidence sort of thing. I'm not quite sure, but I'm going to go down this tack anyway. But stock we often talk about is Samarkand, because it's one of our favourite sort of e-commerce brand stocks. But there was an interesting thing happened this week. I was sort of sitting there watching it, and it was the tick was at around 136p or something, and then a trade went through, quite a big one actually, at 180p. And the market makers went to 150, 170, even though there was clearly a buy at 180. Actually, they rang me and said, "Can you find us any stock?" I actually did ring around everybody, couldn't find any stock at all. So there's clearly a bit of a shortage of stock in the market. But obviously on Aquis, it's on the Apex segment, so they're supposed to give a maximum of 5% spread. So I think they've been given a little bit of a word from Aquis and said, "Oh, you've got to get your act together." So they're now trading at 170 to 180. Which is about a 5% spread. I'll give them that. So it's been a nice move up for Samarkand. But interesting also on the whole spread thing and how markets work. And, I often hear on the blogs or private investors talking to me complain that, the market makers are manipulating markets and things. Actually, they're not. They're actually trying their hardest to keep a level book, if you sort of mean, keep a correct book. But it's obviously been very difficult on this one. And one of the problems is that nobody wants to sell the stock. And I also noticed that Hargreaves Lansdown had some sort of poll to say, should we be trading Aquis stocks? So I actually did hit the poll and emailed them and said, yes, you should be. Because actually, of course, VSA Capital is on Aquis as well as Samarkand and some of our other clients. And they've come back and said, well, we do trade some stocks, but we're thinking about trading them all. Well, hopefully they do trade them all soon, because it's a good growth market, and it's only correct that private investors should be able to access all stocks that are being traded in London. Oh, that was a bit of a rant.
Well, it was, but it was quite. Well, you explained some key points there about market maker, about spreads on stocks, about stock availability, sometimes about the issue of a company. Samarkand Group is SMK is the ticker, is a client of ours, but it's been a very successful IPO, and the share price has risen, and you do get this issue where holders don't want to sell the stock, which makes it tough to get availability. But you're right about them trading all the Aquis stocks. I mean, it's it's right. I mean, I'm a Hargreaves Lansdown. I've got a SIP holder. To have the broader choice we have as investors, the better.
I mean, the other one is, I think a lot of people know, is that a lot of these retail platforms don't like letting their investors do IPOs unless they pay a lot of money. You know, they're in business too, so you can't blame them completely. But you know, the days of when, you know, you could just apply for an IPO or ring up your broker and say apply for it and do it for free have gone. You now have to pay a huge fee to get your broker to apply for an IPO. Whereas in the old days, you just cut out a bit of paper from the newspaper and sent in your check. But of course, nowadays they don't have newspapers, they don't have checks, so that system doesn't really work, does it?
No.
God, anyone would think I'm a dinosaur. Oh no, I've been accused of being a dinosaur.
Hey, now.
Right. Anything else from you, Phil?
Well, it was an IPO today. Made Tech Group. I don't know if you saw that. First day of dealings. UK-based software company, works with government agencies, including the Home Office, DVLA, HMRC, and it raised, I'm just having a quick looky here, I think something around £80 million of funding. Yeah, here we go. So oversubscribed fundraising, 15 million for the group, 70 million for certain selling shareholders. So one of the things about the public markets is that actually, you know, if you own your own company, you can raise capital for the company to develop itself, but you can also exit some for the hard work that you've undertaken. But that was a new IPO today.
Very good. Are you sure you can exit? I didn't exit when we IPO'd VSA Capital, but I don't think anybody have bought my stock. So there you go. And I'm locked in, I think.
Well, that answers that one.
Yeah. Okay. Anything else, Phil?
Oh, just a final one from me. And this is one of these companies I met years ago and should have invested PA. We're always wiser in hindsight, aren't we, as investors, Andrew? Judges Scientific, the ticker is JDG. It's a 485 million market cap. And they are what's known as a kind of portfolio company in the market. So they have a portfolio of scientific instrumentation companies. And their end markets are industry, but also university R&D, and they have tech that's used in the food beverage industry, pharmaceuticals. They've got technology I was interested in for semiconductor electron, not for scanning electron microscope. Sorry, something I used to work on yonks ago. But this SEM, scanning electron microscope, they're important for looking at nanomaterials and silicon chips. Anyway, had interims, bearing in mind that universities being closed, industries being kind of shut down, and conferences not being undertaken. Anyway, things are recovering for them, and their interims the first half of June was showing a nice 15% revenue growth, which was good. It's turning around, but importantly, it was interesting. The pre-tax profits were up 31%. So this is a business that has what's called operational gearing, whereby a small bit of revenue growth generates a higher operating profit growth, and their cash was up 56%. So a nice recovery story there. I've not looked at the specific multiples. I just read a few press articles. It does appear to be on high multiples, but when things are in recovery mode, particularly probably cyclical spend exposed, then maybe the valuation is still attractive.
What this one really tells you is patient capital can be very valuable, and I just flipped up the chart here. I put it in max on the chart, and I've got 17th of January 2003. So I guess that's roughly when it floated. 125p, stays pretty much 125p, although slowly moves up a little bit around the sort of 2012, 2013. So just 125 is where we started, as I was saying, and it's now £76. I mean, that is an incredible performance. As usual, Phil, you told me something that I've missed. Thanks.
Yeah, well, this is what I've always kicked myself on, because I met them in 2010, and at the time I was covering a company called Spectris, which is FTSE 250. Again, it's a portfolio company with instrumentation, electronics instrumentation for all sorts of industries. And this was a mini one, and I should have bloody well invested. But well done to Judges Scientific.
But I think the point is, it does show that sometimes it takes companies a little bit longer to really get going than some investors have got the time for, which is understandable, by the way. But if you can be patient and hold on to these things, you can do phenomenally well. And so perhaps some of the things we're talking about in the new transitional energy space, patience is a virtue. hang on in there, and you may see 10 baggers, 20 baggers, 30 baggers, or in this case, sort of 70 baggers coming along. Anyway, look, on that note, Phil, we're busy. People probably heard enough of our ramblings today. So thank you very much. As usual, if you've got questions or ideas, please let us know. We're happy to talk about them. Thanks, Phil.
Okay, look forward to chatting next week, Andrew.